for joining us today. We're going to start in a few minutes. We're going to start at 2:05. It's 5 p.m. in Nairobi. From those joining us from Nairobi, we'll start at 5:05 as we wait for more attendees to log on and join the webinar. So stay tuned for an amazing and exciting panel. Thank you, guys. Hi, everyone. I think we have a good number to start. My name is Fiona Kiruja. I'll be your host for the day. Today, we have an exciting webinar plan for you on keeping good financial records with experts Diana Vileyir, Irene Dabley, and Daniel Tetteh, senior consultants at Deloitte. We're super excited to learn more about how to keep good financial records for our startups, our organizations, and SMEs all around. We look forward to learning more and taking away all the creative gems and the tips and tricks to do best in keeping good financial records. Take it away, Irene.
Thank you, Fiona. Hello, everyone. Good afternoon from outside in Ghana. You are welcome to today's webinar. So like Fiona said, we are having this webinar on keeping good financial records. In our webinar, we'll tackle the introduction. We'll look at what good record keeping is, look at the importance of record keeping, basic features of good record keeping, forms of record keeping, choosing an accounting software, what records to keep, retention periods for your records, backing up records, recording transactions, and we'll also look at a summary of the record keeping process. Our webinar will be in 3 parts. I'll take the first part, then Dinah and Daniel will take the remainder. So we move on to the introduction. Record keeping is very vital to the success of your business. Every record you have is serving as a backbone to your organization. So it's therefore necessary for you to store, preserve, and manage these records so that you can utilize them in your decision making, your analysis, or anything you would want to rely on your records for. It helps you to minimize losses, manage your cash, and meet any legal or regulatory requirements. Keeping accurate records is therefore vital. So what is record keeping? It is a disciplined practice that you do to make sure that you store every record of your business in an orderly manner. It ranges from just normal ACT files, Manila files, to complex online electronic formats of record keeping. It serves as a form of storage to retrieve records whenever you need it, and you have to update it on an ongoing basis. What are financial records? So in our daily business transactions, we have receipts and other things that shows that these are the transactions we did. So any type of record that pertains to these activities are your financial records. They are documents that provide evidence or summary of your business transactions. Financial record keeping is simply keeping these records we just mentioned in a good way so that you can use it for any business requirements. So these may include your sales, your vendor bills, and payroll processing records. Importance of record keeping. What are the main importance of record keeping? We need to know and understand why we should keep records before we even try to make the move to keep them. So when you keep records as a business, it helps you to know where you stand. You can be transacting business every day, going and coming, doing A, B, C, D, but if you don't keep records of what you are doing, you wouldn't be able to know if your business is making profits or is making losses. So record keeping one helps you to know where you stand, to be able to ascertain your performance over time and also make progress and changes. It helps you to know your profits or your losses as a business It gives you credibility when you are approaching lenders. So every business needs money to operate. Should you require any capital to invest in your business, you need to approach lenders. And lenders will not just give you their money on a silver platter. They need to see something that truly, when we invest in this business, you will be able to pay. So they'll look at your records. They may require you to submit reports and other things so that they'll be able to ascertain your credibility and also your financial capability to pay. It also helps in meeting your tax obligations and legal requirements. So in Ghana, for example, we have the Ghana Revenue Authority that is in charge of every tax obligation of every organization. So if you keep records and they come to you or you have to pay any tax, this will serve as a proof to them that these were the transactions that we undertook within a year or any period they require you to do. It helps in reducing fraudulent activity. So as a business, if you are doing business and you don't keep records, for example, you are selling products or you are manufacturing products, definitely you have inventory or stock. If you don't record the quantity of inventory that maybe you manufactured today and also record how much you sold, you wouldn't be able to know whether some is missing as a result of theft, some is broken, or maybe the salespeople are truly selling, but they are not recording. So record keeping helps you to reduce fraudulent activities. It also aids in decision making on a day-to-day basis. So based on your records that you keep and your processing of these records into reports and other things, you are able to decide if I'm selling tables and chairs every day and I keep records, I'm able to know how many tables I'm able to sell in a month or two. So if I compare to chairs, I'll be able to know which of these products are moving products for me and which of them are not. Then I can decide whether to continue such business or not to continue. It also enhances the audit process. In enhancing the audit process, in Ghana, we have the Ghana Revenue Authority. At the same time, we have other authorities that will come to you that you have to produce reports, or they'll come to you that you need to be audited. So it's a requirement that every business each year, you submit an audited report. Before this audit can go on, you need to give auditors the evidence of what you did. So these records will be relied upon by the auditors to give you the opinion that you need to file your taxes or even to send to your lenders or any other person who is interested in investing in your company or your business. What are the basic features of good record keeping? The basic features of any good record keeping system: one, it needs to be simple to use. So whatever system or medium or any form that you are trying to keep records, it has to be simple. You should be able to know that when I start from this point, I'll go to the next, I'll go to that. It shouldn't be too cumbersome or complex for you in doing it. You should also be able to understand it easily. So if you have staff that they are to follow the record keeping system, they should be able to understand it. Then it has to be reliable. Should we need any report today based on our record keeping system, we should be able to ascertain or be able to get those reports from the records we have. They should also be accurate. The system needs to have accurate reports, or whatever we are keeping in that system, it should be very accurate. Then you have to be consistent. So should we say we are using this process of keeping records today, we need to continue it and be consistent with how we go about it. If there's a need to change, then that change should bring us more benefit than we used to have. The system should also be designed in a way that it will provide information on a timely basis. So should we need a report for maybe our lenders or a supplier today, we should be able to get this report in a timely manner within the shortest possible time you should be able to get it. Forms of record keeping. So we need to understand the various forms of record keeping that we have. We have the manual system and the electronic system. When it comes to record keeping, we have components. So the components are the records itself. For example, you have invoices you've issued to your customers, you have bills you've received from your suppliers. Those are records. Then we have recording, how you record, how you process, and the reporting. These components can either be in a manual way or an electronic way. So at this moment, we would like to ask, currently in your businesses, how do you keep your records? Are you using the manual or the electronic? Even before we go deeper into what the manual and the electronic models. So just take a few minutes to take the poll and show the results. Also, if you have any questions, you can comment in the chat box as we move. After my session or each of the sessions, we'll answer them. Okay. So we have 14 people saying, 14% of the participants saying they use the manual system, the paper-based system, 18% saying they use the electronic, and 68% saying they use both. Okay, that's great. Let's continue. So what is manual record keeping system? This involves recording transactions manually. So it ranges from just using simple paper and pen or a simple Excel to record all your business transactions. Also, information is processed using Excel, or you process it using your paper and pen to result into a financial statement or any report that you would need. What are the advantages of using a manual system? So manual system is less expensive to set up. If you are to use the manual system, all you need is paper, pen, or book, pen, and maybe a laptop just to have access to Excel. So it's less expensive as compared to any other form or any other system. It's also easier when you want to correct errors. So if we are keeping records manually and we record our sales today, should we make any error, we are able to go back, check the sales, and make the correction. It's not too complicated as when you use any electronic or computerized system. It also lowers your risk of getting your data corrupted, because if I'm keeping files and all that, there's no way I'll have virus attacks or anything, or my data or information would end up being corrupted. Then there's a less risk of data loss. So if your data gets corrupted, you lose your data. Or should you have any form of attack elsewhere, you end up losing your data. There's also familiarity with how accounting software calculates and treats your information is not needed, because in an electronic system, you would have to now think through how, when I post A, when I post B, how the system is going to treat it. But with the manual system, you are dictating how it goes. What are the disadvantages? Upon all the advantages we've discussed, definitely a manual system, we should all know by now that it will surely have disadvantages. Your data processing speed is reduced. Compared to other system of record keeping, this manual system has to be something you have to do from point A to B. You have to write, or you have to go through several documents to get the information you need, or even to get a report, you have to do several things. But when you go to other forms, you are able to just click a button to get what you want. And the manual system also requires more effort of accountants. It's very exhausting, because if you are to be writing and writing every day, it's very difficult to keep up, even with your business growth or the number of transactions. You get tired in the end. It is also slower in determining internal control issues. If someone should take something from your store, you only have to go back to your books and others. It's now that people even rely on camera, but to be able to ascertain how much or the volume of the test, you have to go back to your books and be sure that today they move this number of goods from the warehouse to the sales point, and this is the only sales that they recorded. What happened? So before you even realize this thing has occurred, the time between your realization and how far the person you have gone will be very fast. And it's also repetitive in nature. How do we streamline our manual system? Because we are very sure that, like some respondents said, 18% said they use the manual system purely. So how do we streamline this system so that it will benefit you as a business owner or as a worker in a business? You have to sort and store all paperwork, receipts and payments by month and financial year. So we are in 2023. You have all your receipts for every expense you have incurred. You can put it in add files according to month. So every month you close the month and that's it. You don't file anything in that file again. You move to a new file, well-labeled file, so that should you need to go back to pick any document, you'll be able to easily identify which file it's in. You can also file according to your kind of transaction. So you can do according to the type of goods you sell or the kind of expenses you incur. If it is utilities have their file, it's according to month and it's according to the financial year. You can keep also all your original documents, so and date every correspondence. So every invoice or bill you issue, you have to keep a copy of it, the original copy of it. Or in Ghana, we have this tax invoice book that we use to issue bills to people. So with that, we have triplicates and others. We can just keep a copy of that on our file. You have to record all transaction dates and payment amounts. So every day, whatever expense you incur, you have to make sure you record it so that you don't lose track of what you are incurring. And also the amounts are very important. You can also choose to save online financial transactions by month and financial year. So even though some people may be implementing the manual, strictly the manual, these days banks send us bank statements through email and others. And when they send it through email, it's best when you download and you just create a folder and keep that in. So every month you have to request for all those statements, then you'll be keeping it. Then anytime you need your statement, you know I have it in this folder. You have to also learn to back up electronic records on an external hard drive. So like I mentioned earlier, if you have bank statements or even invoices sent to the email to you, you have to back them up. Backing up is very important so that should you lose the data on your computer, you know that you have another source of that for that data you have lost. You have to also capture all income and expenses in statements from both your bank and credit card accounts. So if you receive your bank statement today, you'll see all your inflows and outflows. As these transactions are going on, you are the one who determines when these transactions are going on. So equally, you can keep a card book to record every transaction you are passing. Then when the bank statement comes, you can also compare to it that you have not missed anything or the bank has not missed any transaction on your bank statement. You also have to request that all statements and bills be sent monthly. So should your bank not send any statement to you, you as the business owner or the manager, you have to be asking the bank, today the month has ended, we are closing our books, kindly send us our bank statement so that you can also reconcile with your transactions that you kept in the earlier point you mentioned. Then you can do your report. So moving on, we'll go to the electronic record keeping system. This system involves using electronic tools, mainly ERP or accounting software to process your transactions and keep records using electronic medium. So we have various ERPs. These include Tally. We have several of them. I know some of you even have some on your phones and others. but we'll just give you a few examples here. So we have Tally, Sage, QuickBooks, Syspro ERP, Oracle, Microsoft Dynamics, and Xero. Then the other places that people keep files are the cloud storage options. The ERP, we mentioned ERPs here because ERPs do not only manage your accounting functions, they also manage your human resource, your supply chain, and all others. So some businesses use this electronic medium to holistically manage everything that concerns their business. And an electronic record-keeping system makes it easier for you to capture and generate information to meet your business, tax, and legal reporting requirements. What are the advantages of electronic record keeping? It's easy to record transactions. So should you want to make a sale to someone today, you can start from your system. So it's much easier than writing. Then you can also look at recording your income and expenses, payment to workers, and any stock and asset details easily using the electronic platform. You can efficiently keep records and it requires less storage space. So if you are using the electronic compared to manual, we have to keep several books, several files, several papers. But when it comes to the electronic, everything, all we need is our computer sitting on a desk or something. Then we don't have to create a lot of space to store things. It's easy to generate orders, like I mentioned earlier, invoices, debtor reports, financial statement, and employee pay records. So your payroll, every inventory report you need, you are able to generate it just with a press of a button, you are done. And as you enter your information or your data in the system, you don't need to be computing with calculator and be making sure that, oh, okay, I'm getting the right amount. You see that the system would automatically be summing the things up for you so that you can easily generate your final report. In Ghana, for example, every year, there are tax rates that keep changing. So this year, they changed our VAT from 12.5% to 15%. With something like this, you just enter the rate in your electronic system and it will take effect from the date you assign it to take effect. And there you go. You don't have to go through a lot of work before you are able to put in your new tax rate. You are able to back up your electronic records either on hard drive, an external hard drive, and even store it on an external ground or anywhere you want to store it. Then you also back up records and keep them safe, them in a safe place for easy retrieval. So if we want to retrieve any information right now, we are able to easily retrieve those information because we have backed them up somewhere. Should there be an issue, we'll be able to go back to those backup records. You said many things about the advantages of electronic record keeping, but there are equally disadvantages. To implement such system, you need a lot of money and it comes at a high cost. So you have to be ready to invest. However, though it has these kind of disadvantages, in the end, it will serve you better because you don't have to incur the cost each and every day to implement that. Then once you decide to implement the electronic record keeping system, you have to be ready to train your staff. So there'll be an increased personnel cost for the training. However, as time goes on, your staff will be good at using it. It will be efficient for you and you don't need to incur those costs. It is also dependent on machine. So we have to rely on computer-enabled systems to be able to implement the electronic record. So at this point, we would like to pause and take questions and answers. Like about 68% said, you cannot, in this day and age, you can't go strictly according to just manual or electronic. Most companies we have seen and worked with so far have been able to integrate the two to meet their needs because there are cases where you deal with suppliers who bring you manual, will bring you paper, and you have to use it to process. Therefore, you have to keep the manual paper they have brought you on files and all others. So at this age, a lot of companies are using the tool to transact their businesses. Please, you can type your questions if you have any so that we can address it. Thank you.
Hi, Irene. We actually have 3 questions that have 2 parts. Thank you for such an amazing introduction. One of the questions that we have is, what is the best time to start keeping records for businesses, and what skills are required to be able to keep proper financial records?
Okay. We would advise that the moment you even think of starting your business, you should start keeping records, because definitely you go and register the business, you go and obtain permits for the business. All those things are records that pertain to your business. So you have to start from the moment you start taking a step to start a business, you have to keep the records. What skills do you require? Just like we are in this training today, it will help you to understand or build up your skills in record keeping. We have a lot more for you. So we are very sure that by the end of this webinar, you acquire good skills to keep the record.
Thank you for that. The next question is around what does one need to keep separate records if they pay for all their transactions through the bank and also bank all their transactions at the end of each business day?
Okay, so definitely when you make transactions through the bank, some banks email you of those transactions. Also, you are able to get a receipt. I don't know, for example, if you transact with Stanbic, you'll be able to get a receipt, or you can also download your own bank statement. So with that, you can keep it in a folder every day. These are the transactions I did. Should you have any issue with your bankers, you also have a backup of what actually transpired. There have been situations where you pass a transaction online and it wouldn't go to where they'll deduct from your account. So if you keep that record of the transaction you passed, and maybe your supplier says, I didn't receive the money, you are able to get back to your bank with maybe the email they sent you, or even just what you kept, your download of your bank statement, and they'll resolve it for you to save you a lot.
Thank you, Irene. The next question is around the cost of employing an expert, a record-keeping expert, if one does not know how to properly keep the records themselves. And are there any suggestions of, firms or places that people who are interested in hiring these experts can find them?
Okay. So we are from Deloitte, and we are well skilled in this area. So if you need any assistance with record keeping, whatever you need, even beyond record keeping, we are readily available to assist you. The cost involved will be based on negotiation between us and you, and the kind of work we have to do for you. So we are readily available. You can approach us.
You guys had it first. Make sure to reach out to Irene to assist you on keeping your financial records properly. As we wrap up the section on Q&A and move on to the next section, there's 2 more questions that we'll answer from the audience. One being, what are some of the bookkeeping softwares available out there that they can leverage to use, and at what stage, and what kind of auditors should startups engage to be able to help them keep good financial records?
Okay, so we have several bookkeeping software, just like we mentioned, the accounting software is available. However, it will be good for us to ascertain and know the kind of business you are into to be able to model it to suit you. Don't just go and buy off the shelf software to use. We have to understand what you do, then we can be able to recommend it for you. So just come to us. We at Deloitte, we are ready to auditors. So on the issue of auditors, Deloitte is also available to assist you. And one may say audit fees, I read someone saying audit fees are extremely expensive, but we believe that every profession comes at a fee, and Deloitte will surely give you a fee that meets your capability. So don't be scared of fees, just approach us.
Thank you, Irene. I also tend to see that sometimes some resources may be expensive to access at first, but with a mindset of looking at it as an investment towards the health of your business, I think it's worth every coin. We'll move on to the next section, and then please keep sharing your questions and we'll answer them along the way.
All right. Thank you, Irene, for that presentation so far. As much as possible, we would like to keep this presentation interactive. So from time to time, we'll be raising some questions for the participants to provide answers to. So thank you so far. So far, we've gone through what record keeping is, the importance of record keeping, features of record keeping. We've looked at the forms of record keeping as well, advantages and disadvantages of the various forms. We indicated, we've seen from the presentation that we have the two extremes. We have those who keep records completely electronic, and then those who also keep complete manual. I think there was some time ago, Bill Gates had a vision of a completely paperless office where everything is completely electronic, no paper. You will not see any paper at all in the operating environment. And then you have the other extreme where accountants or bookkeepers are still using paper, pen, and then those big books that they record transactions in. There was one company I went where we saw the fixed asset register being kept in one of those big books. I think they called it the Kalamazoo. I found it very interesting when I saw that. So yes, the various sites are there, and then from the poll that we did also, we saw that there is a lot of the participants are using a combination of both. I think it was about 68% of that. So that gives us a fair idea of the spread of this manual and then electronic. Before we continue with the choosing accounting software, I would like to just pose one quick question. Those who use any form of software, if you can quickly type in the chat box or even raise your hand the kind of software that you use, so that we have a fair idea the software that people are using at their various workplaces. That's the software that you are using. If you can quickly type it in the chat box, we'll be able to take a look at the various softwares that people are using in their offices as we speak.
So we have two who've raised their hands. Margaret and Ethel, please feel free to unmute your mics and contribute.
Hello.
Yes, Margaret, you can
hear me?
Yes.
Thank you for the opportunity. With us, we normally use QuickBooks, and I think it works well for us.
Oh, okay.
And trying also to implement the same in my business. So I would recommend that.
Okay, okay. Thank you, Margaret.
Thank you.
They use QuickBooks in their operations as well. Thank you so much. I think you mentioned another person who had his hand up.
Yes, Ethel, would you like to unmute your mic and share your contribution?
Okay, so thank you for the opportunity. I wanted to ask about QuickBooks also.
Okay.
But it seems she early on spoke about that too.
Okay, all right. Do you actually use QuickBooks or?
Yes, please. I use QuickBooks.
Oh, okay, okay, all right. So far QuickBooks, so far 2 participants use QuickBooks. Any other?
From the comment section, I can see there's one who uses managers and another uses OZE app and Excel.
Oh, okay, okay, all right. You mentioned Excel.
Yes, Excel.
Okay.
OZE app and Excel. There's another contribution for Zero.
Oh, okay, okay, all right, okay. All right, so I think we've gotten a fair idea of the kind of software that people use. So we'll proceed from there. All right, so next we'll be talking about choosing an accounting software. Choosing an accounting software. At the center of your financial records will have to be an accounting software to be able to, handle all your records, your financial records. Now, the accounting software, right now, when you go into the market, you have several accounting software. The number of accounting software that are out there is dizzying. So, and then you have various companies. Sometimes you will be overwhelmed as to what accounting software to buy, whether this one is good. Should I buy one which is already from the off the shelf, or should I have an accounting software built from the scratch for me? In deciding on which accounting software to use is so critical to your operations that you will have to look at the size of the organization, whether you are a small business or you are a medium-scale business or a large business. You have to also consider your pocket. You also have to consider the industry that you are in. You have to look at the complexity of your operation. So all these issues you have to consider before you select the accounting software, knowing that where the software you want one that when you buy and start operating, you have your peace of mind. When you're looking for information, you can easily come across those information. Now, the right system should help you to do a lot of operations. Variance analysis. By variance analysis, once you have this system, at the beginning of every year, you capture your budgeted numbers. Every business prepares budgets. So you capture the budgets into the accounting software. And then as the year rolls on, month on month, weekly, and so on, you'll be able to pull the actuals and compare them with the budgeted numbers. And then you can be able to do your variance analysis, see whether you are performing as expected, and then what the variances are. So a good system should be able to help you with variance analysis. The system should be able to help you with things like aging analysis, which almost every finance department works with, be it the data aging or creditor aging. The system should be able to help you. Cash flow analysis, the system should be able to help you with that. You have to consider a system that you can be able to pull financial reports, TBs, profit and loss statements, balance sheets. You should be able to pull multiple years, either this year, last year, a series of years, so that you can be able to do trend analysis. So you have to look at all those markets. The system should be able to handle things like inventory issues, fixed asset management, payroll. Payroll being a critical part of every organization. If for a reason, a particular month or so, you don't pay your staff, hell will break loose. So you should have a system that you do to manage your payroll system carefully for you. A system should, among others, also to be able to do bank reconciliation. So you have to look at a whole series of issues together with the functionalities before you select the particular software to use in your operations so that your operations will run smoothly. Now, somebody asked earlier, if you want to choose, what do you do if you don't have an idea? And I think my colleague mentioned that you can come to us. Now, it's not just a software, but we'll come and study your operations and see how your operations look like. We'll come and study the entire flow of your organization. And then Deloitte, we are confident we can be able to assist you. Not just that, we will even come and train your staff, come and help incorporate it into your system. If for some reason you are using manual and you want to transition into, what do you call it, electronic, you fully want to automate, you, depending on the degree of automation you want to do, we are capable of helping you. We have the men in place, both men and women, to be back and forth to be able to assist you with this particular issue. In fact, it's not just accounting software, but the entire finance department. Whatever you need to solve your problems in the finance department, so that the CFO or the finance manager will have his peace of mind. He can go to bed and sleep properly. Deloitte, we are at your service. Who else should you call on than Deloitte to handle such matters for you? So if for some reason you are interested in what do you call an accounting software, who to contact, you can contact Deloitte and we can take care of you in that. Now, having talked about choosing an accounting software and the file information, the question now is, what kind of records should we keep? What kind of records should we keep? So the first set is the sales records. Now, the whole 360 about sales, in modern parlance, we call it the order to cash or the OTC, order to cash or OTC, or in some parlance, they call it O2C, that's O2C, order to cash. And we are, by here, we are looking at the 360 of all things revenue, 360 of all things revenue. Talking about the steps, a customer placing order, and all the processes involved for the customer paying you, receiving the goods or service from your side, and paying you, and then we knocking it up against the receivable that we created in the system. So all records pertaining to order to cash, these records you must preserve them so that you'll be able to know what your revenue is, and then be able to really make analysis of revenue and whether you are doing well by way of revenue and so on and so forth. So all this information regarding your order to cash, you must preserve them. And by that, we are looking at your point of sales records. Whether you use manual system or electronic system, we are looking at invoice books. You must preserve them, out of which you write your invoices. If you are using an electronic system to electronic generated invoices, you must keep them. Receipt books, so that when what do you call it, the customers make payments, you will record them. Sales contracts that you have with your various sales patrons, you must keep those records. In modern times, mobile money transactions as well, it's also become an important platform that most businesses use in receiving monies from their various customers as well. So mobile money transactions and records must also be kept and preserved. Credit card documentation as well, where customers pay their credit card, you must keep those records as well. Credit notes for goods that you have been returned to you. For some reason, a customer found problem with the particular sale that you make or a portion of it. When they return it to you, you give them credit notes so that to reduce the sales that you made. So all those records, again, must be kept for future use. Payment advice from customers. Again, if you are using some form of electronic or you've automated your operations, you realize that currently you have the option of people paying you, your customers paying you directly into your bank account. You provide them your banking records, and then when they are paying you, instead of writing check for you, they will pay directly into your bank account. Now, when they pay you, sometimes they combine a series of invoices that pay you. So in order to really ascertain what payment they've made, they will furnish you with payment advice, which they download from their banking portal. And then you can be able to know what payment they've made, and then the invoices that they made, if they combine a series of invoices to pay you. So all those records, payment advice from direct bank transfers must also be preserved. Records of goods used by business owner. Now, this is a thorny issue which most accountants, if we have accountants on on this presentation, they can bear with them. Sometimes the business owner will dip their hand into their business and pick some of the goods and use for personal use. Now, all those records must again be preserved so that we can be able to know ones that were used for normal business operations, and then one that the business owner used, so that we can be able to record the transaction properly. And then any other country-specific records regarding sales must be kept, depending on the jurisdiction that you're on. You must record those sales. So all this form part of the OTC, order to cash, which we currently call it. And so all these records must be kept, and then it will help you to really understand your revenue and all things revenue as well. Then we'll come to purchases and expenses. Now, this again, we call this currently P2P, or procure to pay. P2P, procure to pay. And we are looking at everything involving the procurement processes and what do you call it, selecting goods and services to procure, enforcing compliance, and then order, receiving the goods and services that you have ordered, and then doing possible reconciliations on those things, and then invoices that you receive from your various vendors, patrons, and then finally you paying these particular invoices that you receive. So everything from purchase orders or POs to what do you call it, payment of these POs that you get from the invoices that you get from your vendors for these services that you consume, be it goods or services. So procure to pay. All this process documentation, you must preserve them so that you'll be on top of your game. So what are we looking at? What kind of documents are we looking at here? We are looking at purchase invoices. We are looking at purchase orders or POs, purchase receipts, payment advice. Again, here, if you are running an electronic or some version on electronic, instead of paying your vendors by or paying some expenses by writing manual checks, you can actually do that if you are using manual. You can also pay directly into your vendors' bank accounts. You can also pay directly into your vendors' bank accounts. And then the banking portal, you generate what we call the payment advice. And then you can distribute them to the various vendors that you make payment directly into their bank account, so they know what payments you made, the purchase invoices that you paid on, whether it was one or a series of invoices that you combined and paid. All these documentations must be kept. So whether it is manual payments that you are making, writing manual checks, and then preparing your payment vouchers, or you process them electronically directly into the person's bank account, all these records must be kept. Then credit card statement as well. Other documents relating to purchases, including copies of agreements, leases, all those documents must be preserved. Now, where you make petty cash payments, petty cash vouchers for small payments you make in the office for your daily operations, the vouchers themselves must be preserved. And then most offices at the end of the period where you're going to reimburse a petty cash, you prepare a schedule, attach those what you call the petty cash vouchers to it, and then you go and reimburse. All those records, petty cash vouchers, must be preserved as well. Now, payment runs. Now, every business make payments, whether on a weekly basis or you make them on a monthly basis, or in some cases, depending on your operations, maybe twice a month or so on and so forth, depending on how you are structured in your organizations, you make payments. Again, some prepare manually where you have to get your list of vendors that you're going to pay for the particular payment run, and then you write your various checks. Go and look for the signatories. If one is in the office, you go. If the person is not in the office at home, you have to manually go there and go and look for the person to sign. Or where you are using an electronic system where you can process everything electronically. You have records of your vendors, their bank accounts, the bank details, and all those kind of stuff. So you prepare your Excel schedule, and then you, you will upload it. First, you send it to the signatories. They will, if they are okay with the schedule, then you upload them onto your banking portal. And then again, the signatories have been set up on the banking portal. They can go there and then approve the payment. And then instantly, it will be, it will reflect in your vendor's bank account. The only challenge is that if you make a mistake, the money is too late. It's already gone into your vendor's bank account and so on. So payment runs as well all records or payment run records must be preserved as well. Again, any country-specific records that we've not talked about here, if it pertains to your country regarding purchases and expenses, you must preserve all those records as well. Payroll. Now, if for some reason, any of us have not been paid, we just very uncomfortable. It's the lifeblood of every organization where your payroll system is working smoothly. And so all payroll records must be, preserved, full details of the wages and salaries that you pay, whether weekly basis or on a monthly basis, must be preserved. Employment contract, before you begin to even compute the payroll, the wages and salaries on a monthly basis, you need the contract, the terms of the contract before you can begin to process the payroll. So all those records must be preserved. Tax deducted from the various amounts that you are paying must be preserved. Any fringe benefits must be preserved. Bonuses that you pay, whether biannually or annually, must be preserved. When you meet your targets, all those records must be preserved. Retirement benefits, components paid by the employees, and then the components paid by the employees. All those records must be preserved so that you could be able to be on top of your payroll information when the auditors or regulatory bodies come into the organization. Yes. Right. Inventory, another very serious area in any organization's operations, which organizations must keep an eye on. You will need details of stock in hand at the beginning of the year. You also need stock at the end of the year, stock information at the end of the year, the stock on hand. Stock movement records must also be kept. Stock count sheets, stock transaction records, all those records regarding inventory or stock must be kept as well. Cash and bank records, cash receipts and cash payments, all these records must be kept. Bank account records, check books, check stubs where you use manual system, where you write your check in the checkbook. All the stubs of those checks information must be kept for future auditors or regulatory bodies, revenue bodies who come and check your records. Check deposit books, check paying slips, all those things must be kept. And of course, your bank statements as well, whether on a monthly basis or weekly basis or yearly basis, all those bank statements must be kept. Mobile money transaction. As we stated earlier, it's also fast becoming a platform where most businesses receive and pay money from. All those records must be kept as well. Again, payment advices that you send out to receive or send out to your vendors, receive from customers, and then the ones that you download from the banking portal when you make payment to vendors, and then you send them to your vendors as well. So all these records, among others, must be kept under your bank cash and bank records. Fixed assets, a very pivotal, information in any organization. All records pertaining to your fixed assets that you use in organization, or the information on costs of those, those fixed assets that you procured and brought into your organization, purchase agreement or tax invoices. Mind you, the cost should include all costs which is necessary to bring the fixed asset to the condition that management deems to be usable. Transportation costs, installation costs should be included in the costs. Fixed asset register must also be kept so that you know a list of all fixed assets that you use, when they were bought, when they will actually be fully depreciated. Depreciation reports must be kept. What kind of depreciation do you use? The depreciation method that you use. You must keep record of all those things. Depreciation schedule, of course, to know when your assets have been fully depreciated, and then begin to make preparation to either replace those assets and so on. So all this information regarding fixed assets must be kept. You must, from time to time, every business also disposes of fixed assets from time to time. So all those records, fixed assets that you dispose of, records of the sale, purchase deeds, agreements must also be kept. The proceeds that you received from the disposal must also, records of that must be kept. Details of commissions paid, legal fees, improvements made to the assets must also be kept as well. And then any other records really that is relevant for you to calculate your gains or loss in the disposal must also be kept as well. Liabilities, also on your, your accounting equations, you have the assets equals to liabilities plus capital. So liabilities at this point, information that you need to keep over there. We are looking at the loan agreement where the business has gone in for some loan, whether short-term loan, long-term loan, all those records must be kept. The schedules that come, amortization schedules that come with the loan also must be kept so that you'll be able to know when the loan was contracted, when it will run out, how much to pay, and so on and so forth, the terms of the loan. Tax liability records also must be kept. Now, the moment you start any business at all, the next thing you know, the regulatory organizations will show up at your door, whether you like it or not. So all records, whether they come now or they come later, you must preserve all those records so that when they come, you can easily produce them for them to be able to look at whatever they want to look at, and then you will be free of them. And segregation of your liabilities into current liabilities and then long-term liabilities, all those informations must be kept as well. Debtors and creditors. Information, records on debtors and creditors as well should be kept. Aging reports. Aging reports where you have the aging of your various customers or debts, 60 days, 30 days, 60 days, 90 days, 180 days, 360 days, so that you're able to, keep a tab on your debtors as well, where you need to make bad debts provisions and so on and so forth, impairments and so on. You need all these records to be able to figure out what to do. Debtor reconciliation, creditor reconciliation, all these information. On a monthly basis, you do debtor reconciliation, creditor reconciliation. It's not monthly basis. You probably do it on a quarterly basis, or depending on your operation, yearly basis as well. All these records must be kept and preserved as well. Customer setup records. Before you, engage with any customer, you must do your KYC as you know your customer. So In doing that, you want to make sure you are dealing with a customer who, I mean, you can rely on. It's a good partner. You don't want to engage with somebody that later on you find out is a politically exposed person and so on and so forth. In doing that, you collect a lot of information. You also do your risk assessment of the various customers that you deal in before, I mean, you vouch for them and begin to operate with them. Customer setup records. Before you deal with your vendors as well, you also do some quick checks on them. Make sure you are dealing with legitimate customers, people who will be in business for good partners for not just short-term, but long-term basis. So all information that you collect from them, their registration documentation, banking records, and so on and so forth, all those informations must be kept so that at every point in time, you are on top of your debtors and their creditors as well. Agreements. Every business has so many agreements that you are in. Once you start business, you'll go into so many agreements. So all those agreements, records of those agreements must be kept as well. Sales and purchase agreements, you must keep them as well. Loan agreements, rental and lease agreements, franchise agreements, sale and leaseback agreements, and other, basically any other legal documentation, agreements that you get into, all those records must be kept and preserved as well. Other documents that a business needs to keep. You need to keep your business registration document, your, what do you call it, certificate of incorporation, you must keep them. In Ghana, if you're a foreign company, you must keep your, what they call them, GIPC, yes, documentation. I'm sure every jurisdiction has other business documentation that you keep. Business operating permits, evidence of deposit with utilities, contracts with phone companies, all these other documents, and any other documents, relevant documents for you to keep a business, you must keep these documents, preserve them. As my colleague said, from time to time, every year to every business, you undergo audits. Why do we undergo audit? You want to assure shareholders or other stakeholders that the management and your shareholders, they have the same goal. It's not that shareholders have invested in business and then management are doing their own thing. Shareholders, the auditors will come and make sure what management are doing or the goals of management is in line with shareholders, which is to make profits and or whatever the goals that the business was set up for. So you'll be subjected to audits on a yearly basis, whether internal audits or external audits. So all the records that we mentioned about for the various categories, you must preserve them so that anytime the auditors show up, you'll be on top of your event. Any documents that you have, you'll be able to produce them. Whether it's manual or electronic, you'll be able to pull them out and then you have a smooth audit. Various stakeholders also have audited accounts and then they can be able to ascertain the kind of business they are dealing with as well. Now, before we move on to the next category, there's this tip that we must give. You must make sure you keep your personal records and your business records separate. Keep your personal records and your business records separate. Now use dedicated credit and debit cards for business expenses to make it easy to separate the business and the personal records. As I mentioned earlier, and this is a situation where a lot of accountants from time to time have issues with. Sometimes owners of businesses will, it's their business anyway. Small business, medium-scale business, sometimes they conflate business information with personal information, so that sometimes when you are separating it is difficult. Sometimes I know accountants have been, advising business owners to, keep them separate, but from time to time they overlap. So in order to make sure your records are on point, you have to separate your personal records from your business records to make it easier for you yourself and then accountant or your finance team to be able to operate effectively as well. So that's a pro tip that we'll leave for you guys as well. Now, we move on to records retention. And by that, we are talking about how long, these records that we've mentioned above, how long should you keep your records? How long should you keep your records? And before we start, we'll say that every jurisdiction has statutes on how long records should be kept. So from country to country, region to region, there are, statutes on how long you should keep those records. In Ghana, for instance, what you got there, the act says that you should keep your record not less than 6 years, not less than 6 years. It does not mean that immediately it's 6 years or above, you quickly go out there and touch your documents and say that, hey, I've met the requirement, so I'm just destroying them. No, I mean, anything can happen in life. So it's advisable, yes, you've met your 6 years, just keep it for safekeeping, because even if you kept your 6 years, regulatory organizations, GRA can come. In Ghana, our tax authority is the GRA, Ghana Revenue Authority. They can come at any time. And when you call for the records, you must produce them. If you don't produce them, then if you don't take it, they will slap you with a tax bill for you to pay. And you have no basis to dispute the information that the bill that is brought to you. So it's in your own interest to keep, even though there's a minimum years to keep your tax, it's in your interest to keep it as long as you can, so that you safeguard yourself from any external stakeholder that comes into your business and wants records as well. Now, permanent records that you should keep, examples, annual, audited accounts, what do you call them? Audit reports, tax returns, receipts, bills, and statements, property records. All these records you must, and in fact, all records actually, you must keep all records as much as you can on a permanent basis, so that any stakeholder who comes at any time, you'll be able to, answer any questions about your business, be on top of it at all times, and so on and so forth. So there could be a minimum number of years you should keep, but we advise that you keep it as long as you can, so that you always be on top of your game as well. Now, backing up records. Backing up records is the next topic we'll be talking about. Now, accident happens. What do you call it? Acts of God and acts of men. Acts of God, we are talking about things that is out of our control. What do you call it? Earthquakes, floods, and so on and so forth. Acts of God, we have no control, but we know from time to time they happen. So when you are standing here looking into the future, you can decide that when they happen, what steps should I take? You will not wait for it to happen before you start thinking, hey, what should I do? Standing here, you can know what kinds of things, acts of God can happen, and then take steps to avoid them by, keeping your records safe. And then you can also have acts of men. Men can actually, people can actually be, cynical. Somebody can actually come into your organization and then touch the entire operation. Why? Because he just wants to do it. Somebody can come and steal your records, and so on and so forth. So you must foresee this kind of issues and then take steps to address this kind of stuff. So you must form the habit of keeping your backup of all your records. Otherwise, when there's this act of God, act of men, you either have to go back to square one. You have to go back to square one. So you have to take them, when these things happen, for business continuity purposes, I will still have records, if not even up to date, up close to date, so that I can be able to run my operation safely. So records must be backed up daily. Records must be backed up daily. You need to set up a secure electronic backup system to ensure records are safely stored and backed up on a daily basis. You can use so many solutions. Use as a server. You can use a lot of cloud-based backup solutions that are available. Now, this backing up of records is so vital. It's so vital. And you may have done a hard work of recording your transactions at one place. And then for some reason, these issues happen, fire, accidents, and so on and so forth. And then you lose all your data. It's so painful. It will be very, very painful. You have to go back. There's no way of proving anything. So it's important that you back up all your records and then use the available solutions that we have in modern times, and then back up all the data. So when a disaster strikes, you will not be found wanting. You, if not close to exactly on time, you'll be close to recent information so that business can be able to, it's important for business continuity purposes as well. So at this juncture, I will stop here. We'll continue shortly, but we will open the floor for any questions. If anybody has any questions on what we talked about, we talked about the various an accounting software that you should choose if you are in need of any who to contact. We've talked about what kind of records you should keep, the various OTC records, P2P records, cash bank records. We've talked about how long to record your retain your records that you have kept, and then we've just ended with this session with the backing up of records. So if anybody has any questions, the floor is open. You can either type them in the chat box, or you can raise your hand, and then Fiona will you will mute yourself, and then you can ask those questions.
Thank you, Daniel. The Q&A section is buzzing with questions. Irene, they've been really waiting to get some responses on the session so far. I'll start with this question. With the new changes regarding business registration, does one still need a business operation permit in their districts before operation? Is this one of the records they need to keep?
Yes, it depends on the jurisdiction that the questioner is coming from. But in Ghana here, as in addition to your certificates of incorporation, you also need business operating permit on a yearly basis to keep as well. So yes, you, depending on the jurisdiction, but in Ghana here, in addition to your your certificates of incorporation, you also need a yearly renewable business operating permit to operate. So it depends on the jurisdiction.
Great. And the other question we have is centered around someone who hasn't been, keeping their records and is interested to start keeping their records. What would you advise such a person?
Wow, that's a very interesting question. From the start of the operation, they never kept records. I will say it's never too late to start keeping records, but it means you have a lot of work to do. You have to go, first of all, will those snippets of those record information be available? As much as you can begin. It's never too late to start, but it means you have a lot of work to do to bring your record keeping to date. It's advisable that the moment you start a business, you start keeping your records so that at every time you are on top of it. But if for some reason you did not start keeping, but you want to begin, you have to begin, but you have cases of incomplete records. But it's better than none. Yes, but yes, you can start. It's never late to start keeping all those records.
Right, yeah, absolutely. It's never too late to start. So they might want to start looking for the documents and consolidating them in order to keep them properly.
Exactly.
One of the audiences asked, they have half of their records in the business and they want to do statements of account. How would they go about such a scenario when they only have half of the records for their business?
They have half of the records. They have half of the records. Okay, so Irene wants to take that question. Irene, you can, yes.
Okay, so they can start by approaching a professional firm. Like we mentioned, Deloitte is there. We also have, depending on your jurisdiction, you have a professional firm available that can help you with that. Having half records is not the best, but at least you have identified that you need to keep more. So just approach any professional for assistance, and it will also require more of your time, because maybe your half records may not meet their requirement to prepare the reports you need. So you have to also invest time, assist them to get the information so that you can also get your report.
Great advice, Irene. Thank you. Thank you for taking that. Are there some, record keeping templates, currently available for the audiences, for the audience to use to start keeping track of the records that you could recommend?
Record keeping templates. If it's a manual, the basic record keeping, your filing system and so on and so forth. If you want to use a software to keep those records as well, they are available. But a fair mixture of whether manual and electronic. But yes, the normal files to keep your records, you can arrange them. Sales records into one file, purchases and expenses in one file, records on agreements and all those kind of stuff. They basically the normal day-to-day way we keep records, depending on whether you want to keep it, and then of course, again, in electronic system, the scanner is a very key tool nowadays in the record keeping process, where your scanner is always any documentation that you get, you will quickly scan them, and then depending on whether you are using, if you are using an electronic system, you don't want to access the files again. All those records will be scanned and saved. And in some cases, you link them to the various transactions you are dealing with. So even if auditors come, instead of them going to your file cabinets and picking information, all information has been scanned and either linked into your system or linked to the various issues. So if you are doing something like payment plan, all the invoices instead of having manual payment vouchers and then the invoices and then all those kind of stuff, or you have a schedule and then the various vendors, what you are paying, the taxes that you are charging on them, and then the evidence of the invoice you are paying on will be added as a link. So even when auditors come, all the information will be on the Excel schedule. And then if they are looking for the schedule, what the payment was made up is there, the tax information is there, the invoices that you paid is also there. You click it and then you open and show you the details of the invoice instead of going into a file to look at all those things. So these are ways that we suggest you can.
Right, and are there, let's see, is there a specific checklist that is available to guide them on how to keep, proper records in terms of defining what type of records they need to look at for their businesses? And does Deloitte also offer services for tech startups, precisely SaaS startups?
We actually, Deloitte offers services for all categories of business, So you just need to get in contact with us, and then we can talk from there. Now, regarding what kind of records, I think this particular session up, they talked about some of the records that you keep, records regarding sales, regarding purchases and expenses, cash, fixed assets. So what the session that I just talked about will help address such a person if he wants to know what kinds of records he keeps. So sales records, purchases records, fixed asset records, debtors and creditors, whether you are using a manual or you are using electronic, or you are using a combination of both or a mixture of both. all those records, you can consider keeping those records as well.
Great, thank you. I think we can carry on. The other question is centered around, charges, firms such as Deloitte, charge small businesses with regards to these services. But as earlier mentioned, I think the charges are unique to the needs and the request for the specific business. So please feel free to get in touch with Irene, Daniel, or Dana at Deloitte to be able to get a proper quotation for your business.
Thank you, Fiona. You are doing a good job on our behalf. All right.
Okay, and also on the SaaS, we offer cloud services for clients. We currently have SAP S/4HANA Online, which is much cheaper than the traditional SAP. And we are also looking at bringing on board new cloud-based accounting software systems. So you can equally contact us to assist you with that. Thank you.
Thank you, Irene. I think we can carry on to the next session.
Right. Okay. So I think I will hand over the baton to Dinah, who will take us to the next session. Earlier when I talked about the various records, I gave a bird eye view of the various kinds of records. The next session, she will delve deeper into some of the ways of keeping those records. So over to you, Dinah. Thank you.
Thank you, Daniel. Okay, so we'll move straight to recording transactions. So far, we've been looking at what records to keep, but the question is, what are we even going to do with all these records that we are gathering and keeping? These records will form the basis for us generating our financial reports at the end of the month, at the end of the year, for whatever reason that we need them for. So we are just going to briefly look at some things to consider when processing your accounting transactions. So what we usually recommend is that do a monthly bookkeeping. We know there are some companies that will say, oh, let me wait till the end of the year for me to now book all the transactions that I undertook during the year, just because it is that time of the year for you to produce a report to the auditor. But we advise that it's not a best practice. Always do your monthly bookkeeping. That way you are addressed and you have the report readily available. As Daniel mentioned, sales is very critical and important to every organization's operations. So every business, one way or the other, you do sales, and that is what drives your business. So you either do cash sales or credit sales. There are some that stick to a particular method, and there are some that do a combination of both. So whichever one you are using, you make sure that once you make the sales, you record it in your accounting software. Don't wait till the end of the month. You may lose sight of some of them. So immediately you do the sale, just go ahead and do your double entry in your QuickBooks, your Xerox, whichever software you are using. And when you are recording your sales, please be mindful of the taxes. So for example, in Ghana, we have the levy and then the VAT. Those are not part of your revenue. It's money that you are collecting on behalf of your government. So do not go and add whatever taxes you collect to your revenue. I know that will shoot up your revenue figure, but that money is not for you. So those taxes should be recorded in a separate ledger, and at the end of the month, you remit it to the revenue authority. Also, you have to take note of discounts that you have given to your customers, whichever discount is what that you give. That one should not go into your revenue. That will even reduce your revenue. So some companies or some businesses have a different account that they record all discounts in. At the end of the day, that goes to reduce whatever revenue that you have. So also take note of that. It should be recorded as well. And also there are instances where you make a sale and then the customer comes back that the good is defective or there's a wrong order or something, and you have to return the thing. People are in the habit of, okay, bring the goods and then you just take it and you keep it. But you know, once the person has returned the goods, the sale has not been done. And so your revenue has to be reduced by this amount of goods that has been returned. So also remember to capture your goods returned to offset whatever revenue it was that you need. This will also go into your inventory, but when we get there, we'll look at that. For those in the service sector, I'm sure you don't encounter this return of sales thing, but you also encounter discounts. So when you are recording now, we are saying once you do your sale, you have to keep the invoices that you have issued to the customer. You also have to keep receipts for payments that the customer has made, and make sure that you are arranging them accordingly as Irene has initially mentioned, by month and by year, so that when it's time for audit and you have to retrieve them, you will not spend so much time looking for where you found them. There are instances where customers make payments in advance for a service or a good that we are here to provide to them. When that is done, please be mindful that the money is not yours. And so that is more or less a payable in your books. And so the customer can come back and say, you know what, I'm no longer interested in this service or this product, so refund me my money. So when a customer makes a payment in advance, it's not part of your revenue and you have not made a sale. So don't go and record that you have received revenue of the same amount. Always be sure to reference your transactions in your accounting system. So you see that every invoice that you write has an invoice number. Probably during the procurement process too, there was an order number. So make sure that you reference your transactions with it, so that when you go into your system and you are looking for a transaction for an invoice that you have raised, just by looking at the reference number in the system and it matches the invoice that you are looking for, then you know that that is what they are looking for. If you don't reference them appropriately, it is difficult for you to look for transactions pertaining to invoices that you have issued out. So referencing transactions is very important. And the description, we have received reports that come, and the description, you cannot even tell what service it was. So let's also be mindful when we are describing our transaction. Let's put in a description that if a third party takes your report, we'll be able to tell what exactly the transaction is. It's not now that they'll come and ask you, so what is this? You'll not always be around to explain things, or you may even forget. So whatever you enter into your accounting software, let it speak for itself, so that when you are not there, somebody else can also make meaning out of it. So we come to expenses, and this will result from purchases that you have made from your suppliers. So for expenses, we have different types of expenses. When you take your TV, I'm sure you have a whole number of expenses in there. The critical point is to be mindful of whatever expenses you are putting in your system. So there are some expenses that are monthly recurring. So every month, you know this expense is coming, like your cleaning expense. There are some that take a span of a year. So like your insurance. I know insurance companies in Ghana, I don't know about other countries, they don't do monthly invoicing. So they bill you for the year and then you pay. There are also some that you do through petty cash. So it makes petty cash payments, those small day-to-day expenses that you incur. There is also the payroll expense. And then there's another form of prepaid expense, but this one is more of capital nature. So we call it fixed asset expense. And Daniel has already told you that you need to keep a fixed asset register. So the fixed asset register will help you at the end of the month to calculate your depreciation. So this is like you have made payment for something over a number of years, but you are utilizing the same on a daily basis, on a monthly basis. So at the end of every month, you have to recognize how much you have utilized of that asset. So that's why it is important for you to keep a fixed asset register, not just for you to know what assets you have in your business, but at the end of the month, when you are closing your books, to know how much depreciation you are supposed to charge to your books. And then we have the accrued expenses. So these are expenses that you know you have incurred, but for one reason or the other, the supplier is not able to give you an invoice. So what we usually recommend is that once you have incurred the expense, let's say in the month of June, your cleaner has worked for you, but has not been able to issue you an invoice. Since you have enjoyed the service, the expense has been incurred. So what you can do is just accrue that expense. And then subsequently, when they bring the invoice, then you can reverse the accrual and book the invoice. Now, one mistake that people do when they are accruing expense is also accrue non-refundable taxes. So because you don't know how much the invoice may turn out to be, there are some cases that you are certain of the amount, there are other cases that you are not. So because you don't know how much the invoice amount is going to be, do not accrue the tax. And you know, once you accrue the tax, you have to pay. And you wouldn't want a situation where your money will go and get locked up with the revenue authority, probably overpayment of taxes and things like that. So when you are accruing your expenses, please do not accrue non-refundable taxes. So that subsequently, when the invoice comes, you just reverse the expense and then you book the full invoice with the taxes. Now, we also have the expenses that you pay in advance. Like I mentioned, the insurance, your office rent, for instance, you also pay 1 year advance, 2 year advance. Do not go in June, I made payment of 100,000 for my rent, and so you book the full 100,000 your expense. That will not be right. That 100,000 is for a period of 1 year, let's assume. So you have to split that 100,000 into 12 months, and then every month you expense the portion relating to that particular month, so that you do not go and inflate June's expenses with 100,000 when it's not supposed to be so. So it's also important to keep a prepayment schedule. So basically you have a list of all the things that you have to pay with their period, and then how much you are supposed to expense at the end of every month. It will also help you to keep track of renewals that will be coming up as and when. So when your rent is about to expire, your prepayment schedule will inform you that your rent expires at the end of this particular month. And we also have the petty cash expenses. You have to capture those as well. I know a lot of people who deal with petty cash really don't like this area because sometimes you have to keep your own money there to supplement some loss of money. But if you keep your petty cash, you manage it very well, you will not have to have those issues. So it's important that once the person comes for the money and returns, demand for your receipt, go into your system and put your petty cash expense so that you don't wait. You may forget that the lender has come for some money to go and buy water, and the lender too has not brought you anything. So how do you record this in your book? By the time you are doing your petty cash reconciliation, then you realize that the balance is not matching with your physical cash, and so you have to take from your pocket and supplement it. Don't let that. Always make sure that your expenses are going through your system in real time. Then we also have payroll. Daniel mentioned keeping your payroll record, but it's not just about keeping the record. You also have to remember to put them in your accounting software. So after you have done your payroll round for the month, go into your system and then book the expense and the taxes as well that you have to clear the authority. Tax management. Okay, so I've already given a little introduction on the petty cash, how it is important that you are keeping it very well. And make sure that you do your reconciliation. If possible, at the end of every day, do your petty cash reconciliation so that if there is one hidden missing, you can easily identify. It's easier to remember what has happened during the day than for you to wait after a week, after 2 weeks, and then you go to do your reconciliation and you realize that no, there's a whole lot of money missing. And at that time, it will be difficult for you to remember who did I give money to, especially if you're not keeping proper records. Like when the person came for the money, you didn't sign anything, you just give out the money like that. So always make sure that if possible, do your daily petty cash reconciliation so that by the time you close from work today, you know how much cash you have on hand. And if you have to request for reinvestment, you know that that's something that you have to do. We cannot emphasize on the importance of internal controls enough. Very important, especially when it comes to managing your cash. When somebody comes for money, don't just give the money to the person. It has to be accompanied with an approval. So there are, I know small businesses have a tendency of doing one-man things. So the same person writing the check is the same person authorizing and all of that. It's very possible that you run at so many business risks if you do that. Please, segregation of duties is important, and internal controls are also very important. So make sure that you have some controls in place so that if one person is writing a check, it's a different person that is approving that check. So if I write a petty cash request, it has to be approved by somebody before it even gets to the accountant for you to disburse that money. So if somebody brings a petty cash request and there's no approval, just return to the person and say, I cannot take this money. Go and bring the appropriate approval before I can give you the money. So there is the option of, as Daniel mentioned earlier, of doing your payment either by check or bank transfer where you use your banking portal. Whichever approach you use, bank reconciliation is a must. With this, I will not even say do it on a weekly basis or do it on a monthly basis. As and when a transaction has happened, do your bank reconciliation. So if you are expecting some money from a customer at the end of the day, you have to follow up with the customer to ensure that the payment has come, and you go into your bank statement and check to see if that payment has reflected. If somebody has promised you some money and it's not coming, you don't do your bank reconciliation. How do you know if the person has paid you or not? So always do your bank reconciliation. When you do payments to suppliers, there are sometimes that the payment doesn't go through for one reason or the other. Maybe the bank account number you inputted is incorrect, or some other detail is incorrect, and so the money has not gone through. It's only when you do your reconciliation that you realize, okay, I paid money to so and so on this particular day, and I'm not seeing it here. Meanwhile, you have recorded it in your cash book that you have paid. And so you see that there's a discrepancy between your bank balance, your bank statement, and then what you have in your book. So again, bank reconciliation is very important. If you are very busy that you cannot do it very often, at least at the end of every month, before you close your book, make sure that your bank account balance before you even say I have closed. Daniel also mentioned about keeping your personal record from keeping your personal record from your business record. That also includes your bank statement. So if you are a small business, Don't say the business is my own. So my personal money should be mixed with my business money. Keep two separate accounts, one for yourself that you use to do your personal things, and then another one for the business, so that it will be easy for you to monitor the business bank account to see what is going on. Now, inventory. As you may have already heard, it's a very critical part of every business, especially those who are into the business of buying and selling. You handle inventory alone. So managing it can be very tricky if you are not putting it in the hands of the right person. So what we advise is get somebody who is an inventory man. Please, inventory is very important, and you cannot mess with it at all. If you mess with it, then I don't know, there will be a whole lot of consequences coming with that. So if you can, there are consulting firms that you can always go to for them to manage your inventory for you. If you want to do it in-house, you get somebody who is a your inventory for you. It's not just about buy the things, bring them, give them out, but the accounting for the inventory itself is one area that if you're not careful, you can mess it up completely. So you buy your inventory, it has to go into the system. You need to determine which inventory method, valuation method you are using to charge out your inventory from source. When you sell your inventory or when you move your inventory, that also has to be recorded in the system. So the physical movement of inventory is not a problem, but accounting for it is a very big area that needs proper attention. So you have to be very careful with who is managing your inventory. And you have to also do this, depending on your operation, can be something that you can do every month. At the end of every month, just do your stock taking and see if there are damaged inventory, if there are some missing inventory, or there are some expired inventory. When these things occur, it's not just about removing them from the shelf and discarding them. You also have to record them in your book. So once you do your stock take and you identify all of these, record it so that your inventory amount is matching with the actual thing happening on the shelf. Managing your debtors. We all agree that we have to keep our debtors happy, because if they are not happy, then they'll keep your money forever. So how do you manage your debtors so that at the end of the day, you are satisfied and they are satisfied? You need to closely monitor your debtors. And like Daniel mentioned, before you even go into business with a customer, you should do your due diligence. Gather all the information that you will need on them. Are they a legitimate business? Are they politically affiliated? For those who are environmentally conscious, are they doing something against the environment that you will not want to even go into business with them? So you need to do all of these background checks when going into business with your customer. And once you start dealing with them, make sure that you are keeping proper records for them. One of the records that you set, so you do a reconciliation with your debtor to be sure that what they are recording in their book that they owe you is exactly what you have in your book as receivable from them. So that you are not there expecting $2,000 from debtor A, and meanwhile, debtor A has only $500 in his book that he owes you. And so you'll be wondering, why is debtor A not paying for so and so invoice? It's because he doesn't even have them. Sometimes you do a reconciliation and you realize you have issued an invoice, and the customer is telling you, I don't have this invoice in my system. So where is the invoice? And you're also there thinking customer is not invoice. So once you are into business with your customer, be sure to do reconciliations with them every now and then, so that you are both at par on how much you are expecting and how much the person knows he or she owes you. The other record he mentioned was your aging report. So the aging report helps you in knowing how many days a customer owes you for. So we have the 0 to 30 days, 30 to 90 days, and so on. So depending on your credit policy, which is something you have negotiated at the point of contracting the customer, you know that you are expecting that within 30 days, customer A has paid whatever it owes. If you don't do an aging report and you have to manually calculate, okay, so when last did I do take that issue an invoice to customer in how many days? It will be difficult for you to track the number of days that a particular customer owes you, and you need to know which customers to start chasing first. Maybe your policy is that none of my debtors should cross into or above 180 days. So with your aging report, you are able to tell those who are, and then you can start calling them, sending them emails, following up on your money. So the aging report too is an important record that you need to do. And be updating it. When you issue an invoice, go and update. When the customer pays for an invoice, go and update. So that at every point in time, it is giving you a true picture of your debtor balance. The same for your creditors. At this point, you become a debtor to somebody. And so you also have to, they say, do unto others what you want them to do unto you. Manage your creditors very well. Another thing, keep your aging report for your creditors also, so that you know which of them you have to prioritize payments on and which of them you can delay a little. It comes back to your cash management and your cash flow analysis. When you keep all these records very well, you can easily manage your cash. You know how much you are expecting, you know how much you are expecting to give out. And so at every point in time, when you want to do your cash flow analysis, it will be easier for you to do. And once again, before you contact a supplier, also remember to do your due diligence on this. It may not be your concern at first if the supplier is doing something shady, but one way or the other, it may come to bite you or your business. So it's always important to do all these due diligence so that you are covered in case that supplier is fraudulent or illegitimate. When you are negotiating your payment terms, be considerate. I mean, you don't want to go too far and you don't want to go too close. So negotiate it in such a way that it favors you and the creditor, so that they'll keep wanting to do business with you. Okay. So, I mean, all of these things that we have mentioned is a year-long process. But you have one aim in mind, and that is that at the end of the year, you want to be able to produce your financial report, both for your business needs and for the legislative authority. So then what is the summary of all these things that we have discussed today? It's about keeping your source documents well. And these source documents will translate into your journal in your accounting software. And from the journals, you are able to get your ledgers. The ledgers give you a detailed report of every account that you have. From there, you can drill down into what and what is in this particular account. Then, from it, you are able to build your trial balance. And this trial balance is what will go into your financial. So your financial statement at the end of the year when you are preparing will include the balance sheet that's commonly known as business or financial statement, your cash flow statement, your statement of changes in equity, and then the notes to the financial statement. So this end product can easily happen when the beginning is right. And by the beginning is right, means you are keeping all your records. You are recording them accurately and in real time so that you don't lose out on anything. And then you make sure that your trial balance, you always review your trial balance. there are times where you think this expense or this transaction is where I intended to use. Then you go into the system and it's not there. When auditors come at the end of the year, you confidently pull out your ledger for them. And then they now start bringing up issues that should have been picked up earlier. So always review your trial balance. That also comes down to the internal controls that I spoke about earlier. If there are internal controls in place, somebody is doing the entry, somebody is doing the review. So that if there are any errors, you pick them up in real time, do the necessary corrections before the auditors come, and everybody will be happy. And if you don't like it when auditors come and harass us, so let's do the right thing. So that brings us to the end of the session. To take any questions or comments, or if anybody wants to share their experience with us, that's also welcome. Thank you very much.
Thank you, Dana, for such incredible insight. We do have a few questions. One regarding inventory management. Is there available software that businesses can use to manage their inventory?
Okay, Irene will take that question for us.
Okay, there are several software on the market. However, at Deloitte, we recommend GigaTrack. And with GigaTrack, you'll be able to manage your inventory. You'll be able to manage your fixed assets. It handles your asset tagging and depreciation and all others. So when you come to us, we'll be able to implement the GigaTrack for you.
Thank you, Irene. We earlier spoke about internal controls. One of the questions that the audience has asked is, how can they put in place measures to ensure that the controls are working as they should for the businesses when it comes to the record keeping?
Okay, so one of the ways to ensure that these things are working is if you have an accounting manual in place. So every business needs to have an accounting manual. The accounting manual will document everything that the business needs to operate effectively, especially for the finance department. I mean, when we talk about accounting manual, we only focus on finance department, but other departments also need their own manual to guide them. So once you have an accounting manual, you document all these processes. When one person leaves, it is in the business. The other person who comes will use it as a reference point. Go in and know that, okay, at every point in time, this is what I'm supposed to do. These are the controls that have been put in place. And these are the documents that I need to be able to carry out this particular transaction. So what we will say is get an accounting manual. There are some people who have, but I mean, it's probably 10 years old, and we know that every now and then things are changing. And so regular updates of the accounting manual is important. So once again, we recommend that consult a professional. We do that in Deloitte as well. So you can come to us if it is update that you need with the standards or regulations. We are able to do that. If it is the case that you don't have an accounting manual at all, we are able to help you to build one for your business.
Thank you, Dana. We have another question from the audience, and it's centered around policies. The question is, rather it states, looking at the reports and requirements, they think it's proper to keep proper records, right? So, and to keep them in place, they will need policies in place to guide them on how to keep their records. Are there, are there policies that you can share that have currently been put in place? And also with regards to the accounting manual, what policies are centered around that to help them keep their records properly?
Okay, so before we prepare an accounting manual for you, we have to come to your business to understand your operations. So there is no one policy that fits all. It depends on your business, what your operations are, what your needs are, what your reporting requirements are, depending on your industry. So just come to us and we'll assist you with anything that you want done. We'll hold you by the hand, we'll walk you through, we'll come to your premises, understand your operations, do the necessary checks and balances, and then we can all come up with an accounting manual that's.
Thank you, Dana. I hope that question was answered. So the other question and the final question for the evening as we conclude is regarding assistance of, preparing the accounts. I think, Dana and Irene and Daniel have reiterated, and I will reiterate for them again, if you wish to engage the Deloitte team to assist you with your accounts and prepare your records and guide you on how to do this properly, please reach out to Dana or Irene or Daniel, and they'll be able to assist you. The question is centered around, will there be a discount for those who will be from the MEST community with regards to these services? I think that is something that will be discussed at a later stage, if at all, but Dana can let you know. I'm kidding. So Dana, Irene, Daniel, there's a request for your contact details. Please feel free to share your details below, links to your LinkedIn pages for the audience to reach out to you. Are there any final remarks as we wrap up the webinar?
Okay, so we want to say we appreciate your time today, giving us the opportunity to share this knowledge with you. And we are looking forward to collaborating with you. Deloitte is not expensive at all for you, those of you who have concerns about the cost. Just make the attempt, come to us. We'll always find a way of helping you to meet whatever need it is that you want. And then at the end of the day, we'll all be happy. So we appreciate your time this evening and all the questions that were asked. I hope that we're able to address them for you. If not, you can always reach out to us with whatever questions you have, and we can pick it up from there.
Thank you, Diana. Irene, Daniel, do you have any final remarks?
Okay, so to sum up, I would just say this is a very good collaboration between Deloitte and MEST to, bring us up to speed on records keeping. Is a very critical part of any organization, and I'm happy we've had the opportunity to interact with our listeners, and then all of us have learned something from this process, and we will go out there and build strong businesses and then help it to grow, having all documentations available, all information available, so we can make good decisions, know your profitability, their financial positions, and then you can make good decisions as you go forward. So thank you for the opportunity. Looking forward to interact off stage behind the scenes as well. So thank you, everyone.
Thank you, everyone. We are grateful that you participated in this webinar, and we hope to see you another time. Thank you to MEST also for this collaboration.
And there you have it. Thank you, Irene. Thank you, Daniel. Thank you, Diana. This has been such an informative webinar. We're grateful for the opportunity and for coming on board. For the attendees, thank you for spending your afternoon with us and taking the time to listen in. The slides will be shared in a follow-up email at a later time, so be on the lookout, and please do keep up with upcoming events on the MEST website and the newsletter. If you haven't subscribed yet, please be sure to subscribe on our website. Thank you all and have a great evening.
Thank you, Fiona.
Thank you, Fiona.
Thank you, Fiona. Thank you.
Bye.
Bye, guys.